Welcome, you're watching the Mutual Fund Show. I'm Tamanna Inamdar. Today we're talking about hybrid funds. Hybrid funds are back with a bang, and how? Now, look at this, for example. In FY24, the mutual fund industry recorded the hybrid segment actually recorded a 3.55 lakh crore inflow, marking a 366% rise for 1 year. Net flows of hybrid funds in this period have skyrocketed 870%. The AUM, that's assets under management of hybrid funds, have soared to 7.2 lakh crore rupees, up 51%. Now, what are hybrid funds? Why are they so popular in the last 1 year, and should you invest in them? That's what we're going to be talking about on the show today. And to speak on this, I'm joined by Udayan Adhye, founder of Udayan on Money. You must have seen him on social media, very, very popular with all of those little snippets on how to make money. Great to have you on the show today, Udayan. We have Pankaj Matpal, founder and CEO at Optima Money Managers. Pankaj, great to have you on as always. So let's start with the basics of what are hybrid funds. Udayan, let me begin with you.
So, Tamanna, first of all, thank you so much for having me. It's a pleasure to be here, and good afternoon to all the viewers. Now, hybrid funds, think of them as the name suggests, they are a mixture of various assets. So these could be stocks, these could be bonds, this could be gold, or a combination of all of this. And one of the benefits then of hybrid funds, as you can imagine, when you have a mixture of all these assets, is that you get to enjoy the benefits of all these different asset classes in one particular fund. And just given what has been happening in the world across in the past 2 to 3 years with rising geopolitical tensions, there's a new conflict that's potentially emerging out of the Middle East. Then interest rates have been at highs now over the past 3 years. So because of all these factors, including a taxation change, hybrid funds, with all the numbers that you reported, those are all the potential reasons why hybrid funds have become so popular over the last couple of years.
Okay. Now, when I say hybrid funds, on the face of it, that's a mix of equity, debt, best of both worlds. Essentially, you know, if you can look at it this way, the loss of debt funds is the gain for hybrid funds. As taxation tweaks made debt funds maybe a little less popular, people have gone in for hybrid funds. What's the basic premise, Pankaj, for a hybrid fund? Why would you recommend a hybrid fund for an investor? In what conditions?
Yes, Tamanna, see, hybrid means there are more than one asset class in a fund. It may be equity and debt, or equity, debt, gold, silver, or even real estate. So it means the investor can have multiple asset classes in one scheme. One thing is that we always recommend asset allocation and diversification. So investors can have multiple schemes in the portfolio, and through those schemes, they can have allocation in different asset classes. But if suppose somebody wants to invest in one scheme or starts SIP in 1 or 2 schemes, so it gives you scope of diversifying your portfolio across asset classes. That is one thing. Second thing, as you mentioned just now about tax. So see what happened earlier on debt-oriented mutual funds, even that long-term, short-term capital gain, it was qualified like that, and taxation was accordingly. But last financial year, because now the taxation is based on the slab rate, so if investor is investing in a hybrid fund, so in that case, if it qualifies for equity taxation, it means if there is a small portion of debt or gold, even then the complete asset or that complete gain from that mutual fund will qualify for equity taxation. So investors, if suppose they want to invest 25% in debt, 75% equity, so in that case, otherwise, the 25% allocation in debt would qualify for debt taxation, which will be a little higher. But now, when you invest in a hybrid fund, it means these schemes will be tax efficient. So that is another reason which made it popular. So one is that asset allocation in volatile market, because these schemes provide more stability compared to pure equity funds. And second thing is taxation, so which is the main reasons, I'll say, out of multiple reasons which made them popular.
Okay. So as debt funds became less attractive, hybrid funds became more attractive. Now, Udayan, the next big question is that who should go in for a hybrid fund? Is it for everyone? what are the conditions best placed to invest in a hybrid fund?
So Tamanna, with hybrid funds, because again, they offer a mix of different assets and the returns, as even Pankaj said, right, are smoother because you get the favorability of bonds, which tend to be more stable, or gold, which historically, traditionally has moved out of sync with stocks, though that hasn't been the case in the past couple of years. But given the mix of this, hybrid funds become perfect for new investors or for people who are a little afraid of equity investing, who don't want to invest all their money into equities. And at the same time, arbitrage funds have formed now about 60% of the new inflows that are going into hybrid funds. And that just becomes a fascinating concept simply because of the taxation rule change. Because think about it, right? Earlier, a debt fund would have given you indexation benefit, so your taxation on it would have been lower. But now let's say a debt fund is giving you 7% returns, you are in a 30% category of taxation, you're going to end up with post-tax returns of less than 5%. Whereas with an arbitrage fund giving you a 7% return as well, you're going to potentially get taxed at about 6.26, or the post-tax returns are going to be about 6.2, 6.3%. So hybrid funds, perfect for new investors, the balanced advantage fund category, multi-asset fund category, and for emergency fund purpose as well, right? For almost everyone, arbitrage funds have become the way to go about it. I have personally moved my emergency funds from pure debt funds to arbitrage funds since the taxation rule change. So I think emergency fund and just new investors, so that there's smoother return.
Okay, so good place to park your emergency funds. Good place for new investors. Udayan, you talked about arbitrage funds. I think we should go into that into a little more detail because, you know, a lot of our viewers would want to know what exactly are arbitrage funds? How do you identify arbitrage funds and which ones really work out or which ones are the best?
So in terms of, I'll give you a small analogy to explain how arbitrage funds work, right? So let's say you have to buy a cricket ball and you go to your local store, it costs 10 rupees. But you go 1 kilometer further and it costs 10.5 rupees. So as you can imagine, there's a difference in pricing between two markets. That is what an arbitrage fund is in its purest form. It's just playing out different price changes. And because of the price change, it makes a small gain every single time. And that's why they tend to be safer. And that's why, you know, even parking your emergency fund in it becomes a possibility. So with that being said, my personal favorite arbitrage funds, if I were to name two, and these are not recommendations by any means, are the Kotak Arbitrage Fund and the one offered by SBI, purely because they have a supremely long track record and they also manage a lot of money, several thousand crores, which just makes them very safe alternatives in the arbitrage space.
Pankaj, your take on arbitrage funds and which ones you know, would be in your top picks?
Definitely, I agree with Udayan because the arbitrage fund has become a good choice for parking money for short term. Short term, I said, because if you even redeem within 1 year, if you're parking for your emergency purpose, even then taxation will be 15% only, not like debt-oriented mutual fund now. And in long term, it qualifies for that long-term capital gain tax, which is only 10% if you redeem after 1 year. So that is one reason. Second thing, downside risk is very limited because you are not holding investment, rather you are only buying and selling in different market, how it works. So you're taking the benefit of arbitrage from that investment. So that is why. And not only this, in your portfolio, one is that emergency. Other than that, also you're parking your money. Like earlier, liquid fund was considered to be the best choice when you're parking for short term. But now if you see arbitrage, because post-tax returns will be better. And schemes-wise, I'll say that Edelweiss Arbitrage Fund is one good choice, and Kotak Arbitrage Fund can be considered.
Okay. Now, in terms of the whole set of hybrid funds, of course, we've now talked about how arbitrage is the best bet about it. It's great for emergency funds as well. Udayan, in the whole set of hybrid funds, how do you pick the right one? What should be the parameters or the criteria that you apply while picking the right one? And should it just be restricted to emergency funds?
So this is where it starts getting complicated, right? Because in the world of hybrid funds, there are multiple categories. So we have already spoken about arbitrage funds, perfect for emergency fund allocation. But apart from that, if you want to have growth in your portfolio, then where is it that you will invest your money? So that is where categories like a balanced advantage fund or a multi-asset fund, they do come in. Even within this category, there are subcategories like a conservative hybrid fund, an aggressive hybrid fund. May seem complicated, but think of conservative hybrid fund as it has more bonds than stocks in the portfolio. Aggressive hybrid fund as something that has more stocks than bonds. So if you have a growth outlook in your portfolio, if you want to use this money for longer term goals, not for emergency funds, then a balanced advantage fund can be useful. A multi-asset fund can be useful, because with a multi-asset fund, you're getting access to even categories like gold or real estate or REITs through your portfolio. So simply keeping that in mind, some of the good funds in this category, if you're looking at growth specifically and not as an emergency, then the ICICI Prudential Multi-Asset Fund, the HDFC Balanced Advantage Fund, and the Edelweiss Balanced Advantage Fund are wonderful options, because you don't have to really worry about changing the allocation, right? How much stocks to own, how much bonds to own. It's the fund manager's job, and based on their risk profile, based on their analysis, based on their entire research with their teams, they figure out when to increase allocation in these categories. So I think with hybrid funds, not just for emergencies, but also for long-term growth, which could also be smoother returns, because having different assets will also give you stability in your portfolio vis-a-vis a 100% equity portfolio.
Now, the context in which hybrid funds saw all of these allocations was a little different. It was in part because it's now becoming clear that the interest rate hike cycle is paused. You might see the reverse trend now flowing. We don't know when the rate cuts will start, but you're going to see the reverse trend coming in. Additionally, all of the, I would say, tension or fears about tax disadvantages in debt funds have now eased. Do you expect these kind of inflows to continue? Pankaj Matpal, that's the question for you. And for people making fresh allocations, should they be looking at hybrid funds as a first preference?
Yes, Tamanna, it's not only the tax planning or tax advantages with the hybrid funds, but I'll say if investors are more aware, they will definitely choose to invest in hybrid funds, because hybrid funds have multiple categories. Means it's not only one category of hybrid fund. You have choice of conservative hybrid fund. Suppose you are starting to invest in equity market and you want a small exposure to equity. So these conservative hybrid funds have allocation in equity to the extent of 10% to 25% only, and rest goes in debt. If you are little little more risk you can take, in that case you have balanced hybrid fund where the equity allocation can be between 40% to 60%. Then if you can take little more higher risk, or your horizon is a little longer, you can go for aggressive hybrid fund where the equity allocation is minimum 65%. Then you have choice of balanced advantage fund, or which is also called dynamic asset allocation fund. Then if you want to invest in a small amount, or you want to have only one or two schemes, but you want the exposure across asset classes, so you have multi-asset allocation fund. So that is why if investors are more aware about mutual funds, I think that more money will come to the this hybrid funds.
All right. So hybrid funds is a good choice for, I would say, the more mature investor, the one who understands a bit more, and definitely it's the flavor of this season and many more perhaps. Sahil Dhanani writes in to us. He's aged 25 years old and says he's planning to start a 20,000 rupee SIP with a time horizon of 7 years in these 4 funds. He's mentioning those 4 funds, and increase the investment amount annually. Have I chosen the right funds for my SIP? He says, additionally, I'm planning to invest 50,000 rupees as lump sum. Should I make the investment post-election? He's mentioned those funds. They're on your screen. Let me first start with Udayan, your view.
So Sahil, first up, you're 25 years old, investing 20,000 rupees per month. Give yourself a pat on the back, because not many 25-year-olds are going to be investing 20,000 rupees. And I am glad that you have a long-term investment horizon, because all the funds that you have chosen are equity funds, funds that are investing in stocks. If you're still concerned and anxious about investing that 50,000 rupees in one go entirely, then it's best to take an approach that makes you sleep better at night, because that's what we crave with investing, right? That's what we want with money, to feel safer. So if it's going to help you just stay invested more and stay invested more consistently, then just stagger it over, say, 3 months or 6 months through an STP, or just make lump sum transfers of, say, 15,000 rupees, 20,000 rupees until you exhaust that 50,000 rupees.
Meanwhile, Pankaj, just, your take for Sahil.
Tamanna, as Udyan was mentioning, I agree with him that Sahil has a well-diversified portfolio. He has investment across large cap, mid cap, small cap. Only one thing I've noticed that he has SBI long-term equity fund in his portfolio, which is a tax-saving fund, basically ELSS. So if he is investing intensely in this scheme, he wants to invest for tax-saving purpose, then he can continue. Otherwise, I would recommend him that he should replace this with the ICICI Prudential Nifty 50 Equal Weight Index Fund, which will give him more exposure to large cap. And in addition to this, because he also wants to invest 50,000 rupees in lump sum, and for this, considering his long investment horizon, ICICI Prudential Large and Mid Cap Fund will be a good choice.
Pankaj, just to the point that he makes, he asked, should I make this investment post-election? I thought that was quite interesting. Does that make a difference in your view? If someone's looking to invest lump sum, should they wait till after 4th of June?
No, see, no need to wait for the election. But what I'll say, instead of investing on a single day, if he can invest in staggered manner, so STP serves that purpose, he can spread that investment over next 2 months, 2 to 3 months. So he will get benefit of both the world, before election and after election. So investing in a staggered manner in 2-3 months will be a good choice.
All right, let me take the next question. It's with Narayan, who's aged 48 years. He says, I have around 2.5 crores of investment in mutual funds and PMS. I do a 10,000 rupees SIP and have added some lump sum amount whenever there is a dip in the market. Smart move actually over there, Narayan. So he said, I put an average 3 lakh monthly, including SIP and lump sum. So good amount of investment coming in. He says, I am 48 years old and hope to make my total investment 4 crores in 2 years when I am 50 for my retirement. The plan is to withdraw about half to 0.75% monthly from my total investment as SWP for monthly expenses. Additionally, I've taken one PMS called IIFL Multi-Cap PMS with a growth of approximately 12% in 2 years. Have I chosen the right funds? Is the PMS a good idea? This is a very structured, well thought out investment plan, and he wants to essentially retire in the next 2 years. Pankaj, is that seeming possible with a 4 crore rupee corpus?
See, Tamanna, because in mutual fund, when we do the calculation, it is based on the past experience. And because the horizon is also only 2 years, so if I calculate at 12% with his 2.50 crore lump sum, what he has now, and 10,000 rupees per month SIP, it comes to 3 crore 16 lakh in next 2 years. And if we expect 4 crore, it means the CAGR should be 26%, which is little means, I think, not realistic. So either he has to increase his investment amount or the investment horizon. Otherwise, 26% expecting from mutual fund, I think, or PMS even for that matter, will not be the realistic expectation. So he has to think about it. Either from the 2 years, he can increase the time to 5 years, 6 years, or increase the investment amount.
To increase the investment amount, by how much will he have to increase approximately, Pankaj?
So it should be, means if we take at 12%, so either that what 2.5 CR he has, he should add additional 1 CR to that, then it is possible, or monthly will be very big amount. So he has to see first thing that whether he can afford to invest that much. Otherwise, increasing the investment time, that will be a better choice.
Yeah, but then he'll have to retire at 55 or 56 instead of 50. So I don't know which one is tougher. Udin, I don't know if you had the details of, sorry, you were saying, Pankaj, sorry. You were saying.
Yeah. Yeah, Tamanna, see what happens that it is very easy to say, but 26% expectation is not the realistic one.
Okay.
And second thing, if I say just now that he should increase his investment by 1 CR right now, which may not also not be practical thing. So that is why I said that retirement is something you should retire when you have sufficient money to live on.
Yeah.
So that is why it is better to say.
No, understood. The most doable option of all is that you push your retirement plans a little further. Udayan, what would be your advice for Narayan? The calculation that Pankaj has, he needs to have at least 26% CAGR growth to hit that 4 crore mark in another 2 years.
Yeah, you don't want to bank on the 26% CAGR, right, for your retirement plan. Never ever. Instead, the way I would look at this is you have, Pankaj, about 3.2 crores, right? If you keep investing the 3 lakhs monthly, you already have 2.5 lakhs currently saved up. So, and if you're hell-bent on retiring at the age of 50, then just reverse calculate. So think of whatever money you have, the safe withdrawal in India. There was a beautiful recent study that came out a couple of months ago, the first of its kind for the Indian market, which looked at a safe withdrawal rate for retirement portfolios. And the US rule is 4%. The Indian rule is between 3 and 3.5%. So if you have about 3 crores, that means you can withdraw 9 lakh rupees per year, inflation adjusted, for the next 30 to 35 years of your life. So in that case, you can recalibrate. Instead of withdrawing 12 lakhs a year, because you mentioned 0.5 to 0.7% monthly withdrawal, instead of 12, if you can withdraw 9, if that doesn't hamper your lifestyle, then you can still retire at the age of 50, and you don't need a 26% CAGR for that in that case.
Okay, so do you want to work harder and longer, or do you want to work lesser for a shorter period of time? That's quite a choice there, Narayan, but I hope that was helpful. Very quickly, Srinivas has written in to us. He's 50 years old, goal is a retirement fund. Says, my father has a retirement corpus of 25 lakhs and wants to invest in different instruments. Can you guide us? I don't know if Srinivas is talking about himself or his dad. But anyway, that's quite a vague point over there. But he says 25 lakhs is the corpus and wants to invest it. What would be the broad guidance? Udayan, let me come to you first.
So I am going to answer this from the perspective that his dad wants to invest this from his retirement perspective.
Yeah.
Because I think that would, because he specifically mentioned a retirement fund, so I'm going with that.
Correct. I'm not sure if Srinivas is 50 years old or the dad's 50 years old. But anyway,
Got it. Let's just call him Srinivas.
Yeah. Okay.
So hopefully he'll be happy with our answer. So during retirement, the biggest change that happens to you is that your income stops. Now that can be a very scary proposition to be in. If you have other sources of income, great. If you have kids that support you, great. But I think the first thing that you need to do is just take out some money from this, maybe 5 lakhs, 6 lakhs, and keep it in a very safe place that is non-volatile. Could be a fixed deposit, could be arbitrage funds when we discussed them earlier. And the idea behind this is you should have peace of mind, because especially when you retire, peace of mind becomes something that you crave for more, especially with financial security. And the rest of the 20 lakhs can be, say, split into a mixture of government schemes, but Srinivas, 50 years old, most government schemes for retirement aren't open for you yet. So it could be a mixture of different hybrid funds, different equities, but I would split that 20 lakhs about 50-50 into equities and bonds. And that would give me some stability as well as growth. And maybe even I can set up a small systematic withdrawal plan with that if I need that money. But I'm really big proponent of having that security amount for peace of mind for older people during retirement.
Okay, so good to have that corpus as well. That's all the time we have today. If you want to write into us, you want to ask your queries, do it on WhatsApp. The numbers are on your screen. Feel free. We'd love to hear from you and get our experts to answer your questions. But for now, that's all the time I have on the Mutual Fund Show. Pankaj, Udayan, great to have you on. Hope to see you soon. And to all our viewers, stay tuned. A lot more coming up after the break.